Number two is the marketization of finance, and you might wonder what this means. Let me put it this way. When you went to a mutual assurance company, like Standard Life as it was, and you entered into a contract, you were entering into a contract with the entity, but you knew that the entity was the management and organisation who ultimately rested on the reserves they had built up and the policies of the members. And it was the same was true in the mortgage banks when they were mutuals, like Dunfermline was, or Nationwide still is, around the world. Or even dealing with joint stock banks like Bank of Scotland or Royal Bank of Scotland. It tended to be that if the bank took a deposit in and the bank lent money out, both those relationships, the deposit might be for 3 or 4 years, and the loan might be for 10 or 11 years, the bank kept those on its own balance sheet. What have we got now? What we've got now is that of late, a phrase called mark to market has come in, because more and more of these assets, the banks would originate those loans. So let's say the bank lent a mortgage to every one of you at £60,000 each. There were investors who would come along and say, we'll buy that from you. Now, your loan stays with RBS, but the economic interest in the cash flows goes to the other party. So there's a price for it. And suddenly, you could originate a loan and then sell it. And if you originate a loan and sell it, who's responsible for it? Some faceless guy 2 continents away? Or the local branch manager? So what I've called, I'm sure somebody else has come up with this word before me, but I coined it 2 nights ago. The marketization of finance may not seem intuitive to you. Isn't it always a market? Well, no, it's not. And this, it must have a price today, is a big, big factor, I think, because one of the ways that you manage risk is by matching duration, by length of term of liability. And I can answer that in the Q&A if you like. Naive deregulation. There is no doubt that as we turned our backs in the 80s on the post-war settlement that was deemed to be statist, Keynesian, welfarist, bigger public sector. I don't just mean here, this is lots and lots of places all around the world. If I can make a wee joke at the expense of our American friends, it is amusing to see some of the critique of the Obama healthcare plans, which I'm not saying are right in any way, shape or form. I'm just passing the comment on about the socialization of healthcare as if there was nothing else in America that was provided by the state. But it's interesting how the language reflects deep-seated anxieties about how things should be organized. But one feature is there is no doubt that we got naive. We came to believe that the wonderful profits inside RBS and HBOS and the investment banks were a direct function of the genius of the people involved, and therefore we shouldn't over-regulate them. And if you want a macabre thing to listen to, Google Gordon, or not YouTube Gordon Brown, talking about light touch regulation. And he'd said it all the way through his chancellorship, because he was very happy to collect the corporation tax revenues. But if, on the other hand, really that so-called genius was nothing more than the benefits of a 30-year decline in interest rates, perhaps we might have seen things differently. And I think we allowed the fantastic circumstances, or the seemingly fantastic circumstances, to blind us. And I think a lot of our deregulation, because that was the direction of travel, it was less and less control. I think we were very naive about some of the things we did. The final thing I want to say is that this couldn't have happened here or in America were it not for the globalization of money flows. Now, we used to have a very globalized world economy in the era between about 1875 and about August 1914 for very obvious reasons. Except that globalization was largely to do with capital, trade, and other flows inside imperial systems. The circumstances are not likely to be recreated in the short term. But in the post-war era, despite various attempts at cartels, OPEC being the most notable one, we have seen more and more ever freer flows of trade and money. Now, you cannot lend what you do not have in the form of a deposit. And one of the things you'll see later on is that we've had some very significant surpluses growing in places that cannot use that money, who in turn lent it into economies that were very adept at borrowing it, with some very difficult outcomes, and we'll see some of those later. So that's how this is not exhaustive, but it's some of the things that I think apply as to how we got here. The first thing that surprises me when I and of course the trouble is, every one of you, whatever you do for a living every day, it seems blindingly obvious to you when a twit who doesn't know about it asks really dumb questions. And all they are is non-expert. Because I think this stuff is blindingly obvious, and of course I realise that it isn't, so I apologise if I'm going to take you through this like at a very slow level. But if you take trillions of US dollars, the gross domestic product of the world.
Can you define what trillion is?
Sure, a trillion is a million. You got that one, probably that in your hip pocket. So you know what a million is? Well, 1,000 of those is a billion, and a trillion is 1,000 of those. Yeah, exactly.
US, UK.
Yeah, it's the UK, it's the US one. And we all speak US in my world, I apologise. So, see, I'm a poor man, I only get a US trillion, but he's obviously got a UK one. Gross world product in 2007, it's very difficult to get a hold of a number that would define that. The CIA website's pretty good, the UN website's not too bad. Actually, one of the attendees at the G20 earlier this year said that in 2009 the gross world production will be about 65 trillion. It doesn't really matter, let's call it 60, whatever the number is, it's big. Okay? If you look at the write-downs, we're going to look at this in a minute or so, the write-downs in the banks thus far, that is to say how much they've written off from their equity base. So it's like you having a house worth £100,000, and then someone comes along and says actually it's not, it's worth 95,000. Now, if you don't have to sell your house, it doesn't matter. If you can still keep paying your mortgage, it doesn't matter. But we all have the psychological response of, oh, it does matter. I'm 5,000, I'm 5% poorer. Okay? Well, the banks have had to write down equity thus far to the tune of 1.6 trillion. So if we say the world economy is 60, so 5% is 3 trillion, it's 2.5% alone. But it's worse than that, because the banks lend money, they lend their equity by taking in deposits. So they've got their equity and then deposits, so like 1 unit of equity, 9 units of deposit, they lend 10, okay? Well, that financial write-down has impaired lending in the world economy at least to the tune of 19 trillion. And 12 to 1, by the way, is a grossly conservative number relative to what many of these banks did. So that number is probably an impairment of nearer 40 rather than 19. And then a decline in global stock markets, which affects pensioners and so on and so forth. The wealth effect we've been through, that's why Gordon Brown looks the way he does, is because he knows that we've had something like 1 year's worth of global GDP smash in terms of decline in asset values. The way to think of it is this. Each year the world economy will generate 60 units of activity, and in one 12-month period it's probably impaired 60 units of assets. So if your income's 100,000 and your house is 100,000 and your mortgage is 100,000, what's been impaired is your house is down in value of about the same as 1 year's income. And you'll see that later in terms of the impact of government borrowing. In other words, the people who are telling you these are green shoots, and I'm speaking to camera now, no, there are none. It's the rally, it's the rate of decline stopping, and the experience. It's like if you're in an airplane and it hits an air pocket, your coffee goes everywhere, and down you go, and it calms down because you stop going down, but you're still 10,000 feet below where you should be. And that's what's happening at the moment. Okay?